harder time charging their customers for overdrawing on their accounts. This thanks to new rules from the Federal Reserve. The Fed now asking bank customers to sign up for overdraft protection programs, so customers will have to agree to pay a fee if they overdraw their accounts at either an ATM or by buying something with a debit card. If they don't agree to the program, any transaction where the account has insufficient funds then gets rejected. New rules go into effect in July.
Adam Connors, C.K. Cooper, Director of Corporate Finance, is joining us this morning to talk a little bit more about this story. And Adam, we know if the banks lose $39 billion of overdraft fees, they're going to find a way to get that money somewhere else. Where do you think they're going to find it?
You know, it's going to be tough. We actually at CK Cooper, we have a banking practice where we follow these things very closely. And quite frankly, we're a little concerned because we see that this being a significant part of the bank's revenue, with some banks making up over about 40% of their top line and a lot of times bottom line profits. And so this is something we're watching very closely. Some estimates saying that this new legislation is only going to affect about 2 to 3% of that. In our opinion, we think it's going to be much more detrimental to the banks.
Well, unless their business picks up in other areas, because if the percentage of their profits is that high, that tells you that the other parts of their businesses, and we know this in recent years, just haven't been doing that well, right?
You're absolutely right. And so it's just one area that we're watching very closely as a firm, and you know, it's going to be something to very much so watch in the future.
On the merits, though, Adam, do you agree with it? I mean, I don't know, fair is such a strange word in many ways, but
yes,
does it make sense or that this practice would be taken back, would be taken away from the banks?
Yeah, you know, you can see with some of the legal troubles that B of A ran into, where the logarithmic computer programs that actually try to capitalize on the spending habits and actually capitalizing on the NSF fees and the overdraft fees that consumers were doing. And so, though they didn't admit to being guilty, I think that definitely set the sentiment in motion for the consumer that you know, maybe they're not exactly out for our best interests, and actually making the consumer to opt in as opposed to opt out is going to be, you know, is going to be a true testament to seeing how much consumers really love overdraft protection.
Well, you're absolutely right. You're stuck in the grocery store, you got a big line behind you, and then you can't pay, right? Then it could be a little embarrassing. We'll see if that actually works as far as keeping track of the account. You said that this is an interesting way, or gives you an interesting perspective on the financials. Does that make you more likely to look at financials that have strong exposure to the investment banking side of the business as a bet moving forward, rather than those that have a stronger consumer base?
Yeah, and that's a great question, Jenna. And actually, you know, being an investment banker, I'm a little bit more biased towards the investment banking sector right now. But, you know, quite frankly, we're busier than we ever have been before. And, you know, I'm looking for a tremendous amount of growth within the banking sector. And just given the consumer protectionism that's moving forward right now with the legislation, I just foresee that having a little bit more diminished returns than opposed to my sector. So.
All right, Adam, thank you very much for that perspective. I appreciate it. Adam Connors, we'll be back to Adam in just a few minutes here. I want to tell you about this other story as well. Speaking of the consumer,
back in the States. Jenna, back to you.
Peter Barnes, sounds like a busy trip. Glad you're with the President, Peter. We'll talk again soon with Peter Barnes throughout the morning and throughout the day here on Fox Business.
Thank you.
All right, let's get an instant audit this morning now as Adam Connors joins us, CK Cooper, Director of Corporate Finance. Good to see you again, Adam. What do you think should be the major goals here for the President, as Peter outlined? The next few days are obviously going to be busy.
Yeah, absolutely. And Peter actually did hit on many of the issues that need to be covered, actually, not even need to be covered. The President really needs to focus on the trade relationships within the Asian countries, as well as give them some reassurance that the United States is back in business and we are going to be moving forward, and we do want to be an integral part of the Asian community moving forward.
What do you make of the timing, and considering the timing, what needs to be on the top of the President's priority list of items to discuss?
Sure. He really needs to focus on saying that this is one of the utmost importance with his agenda, and him visiting Asia, the Asia region here as of recent, the first time within his presidency, it's obviously something where he needs to stress the utmost importance that opening up the trade relationships and moving things forward within the relationships are the utmost importance.
All right, Adam, we'll talk to you in a few minutes. Adam Connors over there at CK Cooper with us this morning from California, of all places, where it's 2 o'clock in the morning. Sir. Now, 5 after 5. The FHA is a major source of funding for first-time home buyers. What they do is they provide insurance against default. And right now, the agency has about $685 billion in outstanding loans. Congress requires it to have reserves of at least 2% of that total, and its current reserve of $3.6 billion is about a quarter of what they actually need to have. So not good. But FHA officials are saying a taxpayer bailout is not going to be needed unless the economy were to slip back into recession. And we're going to talk about it right now with Adam Connors, who joins us from out west once again. Instant audit on this one. FHA says they don't need a bailout. If they did, though, this could be a big deal, right, Adam? What do you think?
Yeah, absolutely. Well, there's two things I'm excited about this. One is the officials saying that they don't need a bailout, and two is Jenna's left arm there was just absolutely fantastic. I was really impressed.
Right arm, but fine.
Was it right? I'm watching it backwards, I guess. So.
That's right.
So, no, I mean, that's the thing is I want some time to settle out. Let's let the markets kind of work their thing out a little bit. And so the FHA officials stating that they aren't in immediate concern or don't need the funds immediately lends me to believe that, let's let things kind of pan out. Let's see how the other programs are working. Let's see how some of the other approaches that we're taking, that the administration is taking, kind of settle out.
The Wall Street Journal completely disagrees with that, Adam, and they have an editorial this morning. I know it's early over there for you. You probably don't even have the paper yet, but this is what the Wall Street Journal's out with today in their editorial section. The FHA's bailout warning. Underneath it, whoops, there it is. And what the Journal says is, here we go again. More bailout, more money. We're not actually fixing the system. We're just going to keep funneling money to these institutions like the FHA, like Fannie Mae and Freddie Mac. And we're really not fixing anything in this housing market. What do you think?
I agree to that statement, and I thought you were tying back to a certain devil worshiper that got a hold of a Twitter account up there for a moment. But no, what I think is, I don't think we are fixing it. You're absolutely right. I mean, these are low down payment, low owner equity loans, and so I mean, that's what got us in a lot of this mess in the first place. And so I really don't think we are fixing the issue. It's just trying to put little Band-Aids in little issues to try and prevent the spillover. So I think they're absolutely right to that point.
Okay, so then we should or shouldn't bail them out if they need it, is the bottom line.
You want me to give you that answer, huh?
Sure. I mean, while you're here, right?
Yeah, why not? I don't think we should bail them out.
So let them...
Simple as that.
But because the question is whether or not that hurts the economy too much to let an agency like this go under. That was the argument with Fannie and Freddie. You could not help them, right?
Mm-hmm. I think the question of actually bailing them out, as opposed to some of the other information that's currently within the news, as far as changing the way that their approach to try and help stopgap some of those issues moving forward, I think could be a good happy medium there.
All right, happy medium it is. Thank you, Adam. Appreciate all the time today. Adam Connors out there on the West Coast in the middle of the night.
Representing.
Getting up early. Up next, a check of the market movers for you.
Let's take a look at these futures as we head into Friday's session. And we're seeing the move in positive territory, albeit not with a whole lot of conviction after yesterday's down day on Wall Street.
Right. Not exactly representing.
Not exactly.